Well, we survived another week. It's been crazy. I don't know. I just feel like my entire weeks are consumed and just completely focused on what the tasks at hand are. And, granted, I'm grateful that I'm as busy as I am, but, the more I think about this, the more I have to start doing the other things that help keep your business going, right? Because I'm an independent businessman, no matter how I look at myself. But feels like sometimes real estate is still at the behest of the desires of greater powers. And I think that for the most part, that's true, right? I mean, we're always looking at houses. What are the market going? What's the market doing? Is the rates are it going up? Is it going down? And well, in a market where we're so focused on rates, we're really missing the big picture. And people tend to forget that when you buy anything, it's always a long-term investment. And you might lose out today, or you might lose out in 6 months, but in 6 years, 18 years, you're going to make that money back. So if you buy a house for $1 million or what have you, it's going to come back. Oh, but the rates are so expensive now. Well, I hopefully you saw my thumbnail, right? Rates for jumbo loans are under 6%. And you can get further down. Now, these aren't quoted. These aren't after they take a look at your application and find out you have a 520 credit score and you have a bankruptcy, and then you're going to go say, well, my buddy Vito just said you can get me under 6%. Well, no, it doesn't work that way. You still have to qualify and show that you're a good risk, and that you have a good job and you have reserves and you have all that stuff. So make sure that when you do apply for a job or a loan, you are ready for everything. And there's classes that we have on how to prepare yourself to present for a loan and how to make your loan look better. All right. So, yeah, if you're a lender, I'm sure you've been telling people this for weeks now. We can get you under 6. You just have to buy it. Let's take a look real quick. Right? Let's take a really quick look. Oh, wait. Here we are. Go here. Now you can see. Oh, wait, that's not it. That's this. It's 30-year fixed, but that's conventional. 30-year jumbo is 5.66. Now, everything has a cost. You have to pay your lender. You have to pay the processing. You have to pay the broker. You have to pay fees. You have to pay all this other stuff. So that gets bumped up a bit. That's why I'm saying it's not quoted. Don't say Vito quoted me 5.66, because I will smack you upside your face. I won't do that. But different places offer different rates, right, with different fees and points. At the end of the day, yeah, the rate does make sense, but you also want to have somebody that you can know and trust and ask questions to and help strategize down the road, right? And all the lenders that I work with understand that. We have a dialogue about understanding, what does that mean today? What does it mean in 5 years? How can we best serve this whole thing? And it's not just let's go to the store and buy cheap gas, right? All right. So what does that mean? Is it the rates are coming down? I've been saying the rates are going to come down. You can see the rates are coming down now. Here's a little chart, right? Here's a little chart for the jumbo. It's basically all the same thing, right? Rates are coming down. Well, they're not going to be back down to what we're used to. I don't think that's going to happen forever. But what do I know? I mean, here's what I'm going to tell you, that anywhere between 4 and 6%, that's a good rate. That's a good nominal rate for interest when you're buying a house. So yeah, it sucks that you didn't buy a house back then, but also we needed to slow down the economy. Well, we needed to slow down the real estate market because investors were taking advantage of it and was keeping buyers from buying it and creating their legacy, etc. Right? So now that investors are out, and we're seeing stories all over the place about investors going away, this makes it a good time for buyers to enter the market. Whether you're a move-up buyer or a first-time buyer or a relocation buyer, this is the time to buy, because if rates go down below 5, then we're going to have a crazy seller's market again, right? It's not really a buyer's market right now because I'm working with buyers, and every house that we look at, we put an offer on. It has multiple offers, and yeah, just kind of part of life. It's not that there's only one buyer now. I think we've missed the mark. That was over when it was way above 6. I've been telling people for I don't know, 6 months. If you're going to do and buy a house, and this is your first time home buyer, you're a first time home buyer, now is the time to buy because there were less people in the market. Now that rates are coming down below 6, there's more buyers entering the market. I have a house, we have 3 offers on it, listing. I have 3 offers on it. One's a low ball, we're not even acknowledging it. And we acknowledged it, but that's pretty much it. But the other 2 were really close, so we're just firming it up. Right? We're getting them, see which one comes back with the best offer, right? Because they're really close, but putting apples to apples, we'll figure out which one has the bigger shine on it. And that's the way you got to look at it. You have to be pleasant. You have to know how to work it. Is the market going to come back where it's a seller's market? Not unless it goes below 4. No, I could say 4.25. Yeah, maybe 4.5. It'll be normal, and that's the normal here in the Valley, right? In Silicon Valley, it's normal for a seller market because there's less inventory. That's the big problem, right? Are we going to see sales volume increase? Yeah. I mean, right now, if we look at the inventory right now. Now, this is just San Jose. San Jose, single family homes, 3 bedrooms or more, blah, blah, blah. Let's take a look at how many homes are in Santa Clara County active, just single family homes under 2 million. There's only 400. So let's go back to this real quick. In San Jose alone, one of 11, 12 cities, that's half the inventory. I know size-wise, I totally understand it. But if we go up to 3 million, it goes up to 500. So I'm going to tell you that the median price is now closer to $3 million in Santa Clara County. As a matter of fact, I've been using this report here. This is 2022, so don't think that these numbers are going to continue to go up. If you look at all the houses on average sold in each individual city in Santa Clara, you see Los Altos, Palo Alto, Saratoga, Los Gatos, Cupertino, Mountain View, and then San Jose is all the way at the bottom. If you average all that up, I bet it's around $3.3 million. I haven't done the math. I'll do that for you next week. If you look at the cities in San Jose, as far as which ones are the most expensive, it's Almaden and Willow Glen. It's a far cry from 3.3. So we're far below the median price of Santa Clara County, 3.3. And when I come back and tell you that the rural median price is 2.6, you can come back and yell at me all day long. But here's the thing. Inventory is at a huge, huge low doldrum right now, right? 229 homes. I know that this is just the beginning of the season, March, April, May. And by the way, if you're thinking about selling your house, March, April, May is the time to do it. It takes us some time to get your house ready to sell. All my contractors, all my handymen are really busy right now for houses that we're getting fixed up. So just keep that in mind. We have to put you into a process. You can't just slam bam, get your house on the market unless you're okay with getting your house on market as is. And we'll discuss that a little bit. But look, if you go back over here, 654, 688, 676, 682, during July timeframe, inventory really increases. Right now, we're at this doldrum of 230. That's why you're going to see volume pick up. As a matter of fact, you look at the pendings. These are houses that are that go into contract every week, right? 38. That was double what it was 2 weeks ago. I mean, granted, over here we're looking at 90, 80, and during 2022, 21, we're seeing, triple digits, and that's weekly pendings. But we also had the inventory that was climbing up. So do we see the market coming back? I think we're still going to have hesitant buyers, but there's going to be buyers that just get frustrated. And that's the problem is people get frustrated and they're like, just take my money, please. I know 10, 15 years, I'll get my money back, whatever. Is this still a good time? Is this still a good time to buy? Yes, it's still a good time to buy. There's still not the crazy amount of buyers that were out there like it was back in 2022. You have competition now and the seller has leverage, but we already talked about that over the last 6 months, right? Is it too late? Absolutely not. It's never too late. What happens if you're selling? Well, I'll tell you, be patient. Houses are taking longer to sell. Days on market right now in averaged out about 24 days. In 2023, it was, I don't know, what was it? 13 days. Yeah, there you go. So you just have to be patient. It's not that the house isn't going to sell. We're just waiting for the right amount of buyers to come in to form a tipping point so that we can get offers on the table so we can look at them. So yeah, you can still sell, right? Understand Santa Clara County that's why I use San Jose, which isn't even really a whole market. It's it's like a macrocosm of multiple markets. Santa Clara County has so many different micro markets that you can't really look at those numbers that I was showing you, the LP to sell, the list price to sell price reports. Those don't really mean anything. Those are just glossed over general numbers. When you look at specific areas, like specifically Blossom Valley right now, there's only a couple houses for sale. Just a couple. I mean, it's crazy. Let's see. As a matter of fact, we'll just go right here. I'll tell you exactly how many. 24. And that's 2 zip codes. Sorry, got to dodge this. That's 2 zip codes, 95123 and 95136. That doesn't even include up here, but that's all condos. It's not a lot of houses. Guys, I'm telling you, there's not a lot of houses, right? That's my listing. There's done. There's just not a lot of houses for the amount of people that are trying to buy houses. Buyers are being picky. You just have to be patient. Okay, so going back to, I know we got to make this quick. Sorry. Going back to this jumbo thing. If you look at conventional, come on, 6.11, there's a lot of talk and speculation amongst the lender community that this is going to be below 6% by May. It's going to be, so we're going to see the rates come down. That's the conversations that I'm hearing all across my all across my boards. Whew. All right. So these are a lot of questions that we unpacked. What does that mean? What does that really mean? If you're thinking about selling, get your house ready to sell. If you're thinking about buying, buy now before it becomes the selling season. If not, it's not a big deal. There's just going to be more buyers in the market, March, April, May. It might go through the summer. Who knows? Last but not least, I just unleashed my map tour of Willow Glen. And it just goes through a bunch of different streets. You can take a look at it when you want. But it's a nice little thing where it shows where these streets are, the different streets, you know, the big streets, the smaller streets. Gives like a little map cursor, and I'd love for you to take a look at it. I'll have that in the comments below. Let me get back to my thing here. All right, 15 minutes. Got to keep it lower. Hey, if you like these shorter ones, let me know. If you want them longer, you probably won't even like that. If you have ideas or thoughts or questions, hit the descriptions below. I'm Vito Scarnecchia with the Abitano Group, powered by Compass. Have a fantastic weekend, and maybe we'll see you out there.